The price earning multiple of INDUSIND Bank is low as compared to its peers. Is it because the market has deeply discounted the share price based on the multiple risks associated with the bank? INDUSIND Bank, among the top 5 private banks of India, market capitalization of over rupees 1 lakh crore, enjoys lowest price earning multiple among its peers, pan-India presence, strong branch network. Promoter holding small but quite stable, almost 70% held by FPIs, mutual funds and domestic institutional investors. Minor changes in holdings over last 4 quarters. The bank has rewarded its long-term investors, more particularly after COVID. But last 1 year, the share has remained unrewarding, largely due to sidewise bias in price movement. A great story of impressive revenue growth, CAGR quite superb. Profit after tax reflects consistent performance. PAT percentage quite attractive and supportive. Net worth of the bank boosted by strong profitability. Deposits have also registered a similar growth during the period. With net worth at over 16% of deposits, the bank is sufficiently capitalized with a comfortable capital adequacy ratio. Growth in net interest income suffered particularly during the latest 2 quarters. As a percentage of interest income, a continuous fall for over 6 quarters in a row. The weakness in net interest income largely due to rise in interest expended during the period, more so in the 2 latest quarters. Operating expenses register a rise across last 6 quarters with substantial impact in Q1 25. Provisions have been on a consistent decline for over 6 quarters but have a sudden jump in the latest quarter due to higher provisioning. Aggregate negative impact on quarterly profits, deeply affecting profits of Q1 FY25 in particular. A strong provisioning along with net NPA is seen across quarters. Gross NPA has pronouncedly gone up in Q1 FY25 due to high slippage observed during the quarter. A very prudent provisioning with a coverage ratio averaging 70% has added to the quality of net NPA. Time deposits have grown with the bank in size and significance at a considerable pace. They have added to their dominance with a growing share in the aggregate deposits of the bank. Poor and falling year-on-year growth in current account, savings account, CASA deposits. Growth in CASA is not in keeping with the rising aggregate bank deposits. Shrinking share of CASA for 7 quarters in a row has inflicted damage on cost of funds. Impressive growth in bank deposits in spite of poor CASA growth with support from rising time deposits. Impact is on cost of funds which have been rising quarter over quarter. This has stressed up the bank margins, affecting overall profitability. A virtual stagnation of loan book in Q1 FY25. Asset quality concerns force a check on growth with prioritized collection over growth strategy, a risk rationalization effort as a part of ongoing business efforts. Corporate loans, the leading segment with its minimal GNPA risk, has grown at a rate much below the quarters before. In the vehicle segment, in spite of bank leadership, loan volumes have flattened. The drop in cards business revenue in non-vehicle segment and reduction in the volumes in the microfinance segments has been quite worrisome, and they have been subjected to controlled disbursements, notwithstanding their high-yielding propositions. The bank has grown its deposits and loans with a loan-to-deposit ratio in excess of 87%. But the deposit growth has been lagging loan growth, highlighting bank's positive market positioning. Sadly, the growth of loan book, instead of growing beyond deposit growth, has yielded to it with a continuous fall in loan book growth rates over recent 3 quarters. This is not a positive development for the bank. Over last 6 quarters, share price has been moving in a range with more of sideways movement. Price earning multiple has been moving towards historical lows, remaining attractive vis-a-vis peers. It's quite likely that the market places the bank in a discounted price earning multiple range on the basis of the growing portfolio risk, more specifically in respect of unsecured and microfinance loans. Price action data for the last 3 months highlights price movement with volume support. This is also confirmed by the movement of both price and quantity above the 100 days moving average. It will be prudent to wait for further signals with the price moving along with quantity for a convincing long-term trend. On a weekly chart, the bank is in a positive ascending channel since 2020 with an upward bias, as evidenced on multiple occasions during the period. 2024 till now has placed INDUSIND share prices moving within a range inside a descending channel, and even the Bollinger Band placement of candles suggests no firm indications of any reversal of trend. Bearishness persists. Company's entry into AMC business through a subsidiary graduating from a mere distributor is a strong positive. Attempts to improve the portfolio size of home loans from the current 5% is a step in the right direction. Fall in CASA deposits and a corresponding rise in the credit cost has been major weakness of the bank. Quality fears in unsecured loan segment and also microfinance disbursements is a major concern. Hope you found this video on INDUSIND Bank to your liking. I am Vittal Prabhu with the weekly video Stock Learning Simplified. You can access similar videos at our info card. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.